Okay, so this video is my review of the market activity, really, my trading for the first trading week of February 2025. I'm recording it an entire week late when I'm supposed to be recording my video reviewing the second week of trading in February. But for reasons that I can't go into in this video, I was unable to make that video. But I will not be found not doing my weekly review. And so, thankfully, it's going to be a short one. For the week of February, that is from Monday, I think it was 3rd February, you know, from Monday, 3rd February till Friday, 7th February. This was what happened. I was anticipating price to trade bullishly, but at the start of the week, so these five candles, one, two, three, four, five, are not part of what I'm considering in this video. They had not played out at the time that the trading activity I want to analyze occurred. So this was what happened on Monday. Price opened with this huge gap lower. What happened was, I think President Donald Trump was mentioning tariffs, and so that shook the market quite a bit. But you can see that for the rest of the week, so this was it. This was that huge drop. But for the rest of the week, price essentially rallied. So when price rallied, right, this was Monday's trading. When price did this, came back, broke through this high, and continued, we can see that Tuesday created this 4-hour fair value gap, right? Now, when this fair value gap was created, all I wanted to see was price come back into it for a continuation to the upside. And that happened on Thursday. Now, this week was NFP week, so I did not anticipate having many trading opportunities, and I also hoped to do all my trading before Friday. These two bearish candles are the result of NFP. So if you go down to the lower time frame, this trade was taken on Thursday. This is the trade idea. As you can see, it was a 3 hour. On Thursday, what happened was that price started trading lower, traded into the 4-hour fair value gap. So let's go into 15-minute time frame to see what happened. Now, on this particular week, I took two trades off of the same trade idea. My first trade was a loss, still in this bit of price action. And then my second trade was the win, but they were not taken in the same session. And so my rule is if I take a loss on a particular setup in one session, I have to wait for the next session. If the next session prints my entry signal again, then I'll look to take it. And that's exactly what's happened. So this is the risk reward tool. Let me show you my thought process. So this was Thursday. We can see that Asia consolidated with a downward tilt. Then during London kill zone, price traded aggressively into the 4-hour fair value gap. It took out the previous day's Asia low. So that was the liquidity sweep I was looking for. And then now on this day, pound news was coming out, if I remember correctly. The British pound was about to announce their interest rate. And if we check the same bit of price action for the week under review on the pound, you can see that this downward move at the time when euro was consolidating inside this 4-hour fair value gap, the pound was still trading lower. So there was a divergence because on euro, price was ready to take off. Price was accumulating inside this 4-hour fair value gap, was getting ready to take off from here, but the pound was still weak. That is why, although the pound was trading much lower, euro was just consolidating and holding price here because euro had no reason to keep going bearish. So what happened was when price traded into my area of interest, now in hindsight, I should have just waited for the pound news to be released. But I know that if, for example, heavy pound news like the interest rates, that's the pound's version of FOMC, is being announced on a particular day, what I'm supposed to do is I avoid the asset on which the news is coming out for that day. That is fine. But what I have learned in my experience, for example, there was a time when it was a Friday and all the manufacturing PMIs were coming out. The Euro manufacturing PMI, French, German, US, all of them were coming out. And it was Friday morning. I saw a setup on the New Zealand dollar. So I thought, since I'm avoiding the pair on which that news volatility is expected, I can take my setup ahead of the news. I can afford to discount the news, if I'm trading a correlated pair, but that the news does not impact. So, for example, if the news is dollar news, then of course you can't touch any one of them: New Zealand dollar, pound dollar, euro dollar, no. But if the news is euro news, then I would think, oh, I can trade pound. Or if the news is New Zealand news, or I would think, oh, I can trade euro. But what I have learned is every single time that I took a setup on a correlated pair, the volatility of the news on the pair where the news was released tends to negatively impact my trade, to negatively affect the pair on which the news was not released. So my learning from this particular first week of February was to treat major news updates. So as long as it's a news update that you would not like to be trading, I would treat that news update as if it's being released on every pair that I trade. So I just treat it the way I treat dollar news. So if euro interest rate is being announced, for example, if pound CPI is coming out, for example, if euro CPI, if pound CPI is coming out, if euro interest rate, dollar interest rate is being announced, I treat them the way I would treat CPI, FOMC, or NFD. So that was what I learned. Now, this was the first trade I took that resulted in a loss. You see that when price traded into it, if you know my trading strategy, you can already identify the trade. This beautiful engulfing candle slash pin bar slash hammer candle. You can see that it took out the low of the previous candle and then closed heavily bullishly. So this was my entry signal. You can see it happened during London kill zone. So I took that first trade here. I was confident in taking that trade because I did not think that whatever was happening on the pound was going to impact the euro, and I was targeting 3R, which was this high. As you can see, price went into a consolidation as the pound was trading lower, and about 30 minutes later, I got stopped out for a loss. After I took the loss, no problem, I went back to the sidelines. But what happened when New York kill zone rolled around? Now, this is New York kill zone, this purple box. When New York kill zone started, what did we see? Now, at this point, the pound news had come out. And so, what did price do? Price took out the low of the London session consolidation with this candle. Then we can see that the next bullish candle was this blue candle. The exact same thing that happened here when I took the first entry. It took out previous candle's low, engulfed the previous candle completely, closing above that candle's high. That is a perfect entry signal. So I took that trade here. My stop went below this low. And you can see that this trade actually put me in quite a bit of drawdown. You can imagine about 90% drawdown. Look at this. So I took that trade and then price kept trading against me. I thought I was going to lose the trade, but that's why you need to put your stop at a valid point of invalidation and you need to believe in your edge, letting it play out. So when price was done, although it was still consolidating, it respected the low that was made in New York kill zone after the consolidation had been taken out, and then price rallied to my take profit. I was in this trade for a little under or a little over 4 hours. So I closed this week, this was the only trade idea that I had. I took a 1 hour loss, then I took a 3 hour win for a total of 2 hour on the week. Now, something interesting. I have not outlined it here, but you can see this was Friday's price action. Now you can see Asia low created these relatively equal lows. This actually is a 4 hour fair value gap. Another 4 hour in this bit of price action, that 4 hour fair value gap, was respected. So this 4 hour fair value gap extended all the way to this point. Now what do we see happening? This was ahead of NFP. Price during New York session traded lower, took out London low, took out Asia low, and then printed this candle. Now the candle looks small in comparison because NFP candle is right next to it, but this was it. Now you can see that at this point, this candle did not look so small. So it took out the candle low, printed a beautiful hammer candle. And under normal circumstances, this would have been an entry for me. You enter here, you put your stop below here, and then you target 3R. Now, the reason you don't trade during news, and I wanted to record this and save it, is that you see this NFP candle. You have no idea what it's going to do. Now you consider this candle, right? You don't know if you would have been in the trade all up till NFP. But when this candle rolled around, you don't know if it went down, if it wicked down first, or if it wicked up first. Just look at the range, look at the range, look at the range of this candle. Now, you have no way of knowing the range of this candle is 62 pips. You have no way of knowing what that candle is going to do. So you don't want to be in this trade when NFP is rolling around, because if it had wicked all the way down and taken out your stop, slippage would not have let you get out at this price. Slippage would have made you get out somewhere here. And if you're trading a funded account or a challenge, you've probably lost that, especially if there are consistency rules. Even if it's your live account, you've probably lost more than what you bargained for. So I wanted to record the example of this trade. Now, I was watching this market live. I saw how it played out. I know what it did, but that's not relevant to this recording. This is the reason that you stay out of news trades. So, first trading week of February 2025, 2R.